What's up, family? This is your brother in the kingdom, Emmanuel Destiny. Welcome to yet another valuable video, guys. As you know, we are in the Forex Beginner series, and of course, today we're talking about what is a spread in Forex trading. Of course, I will be teaching you exactly different types of spreads. So if you're a total beginner watching this video, make sure to subscribe, like, and switch on that notification bell so that every video that we post, you are one of the first to actually see these videos. Okay, so we're gonna go straight into the information right now without wasting any more time after this info. What is a spread in Forex trading? Forex brokers will quote you different prices of a currency pair. They will give you the bid and ask price. And of course, if we go into definition, the bid is the price that you're willing to sell a currency. And of course, the ask is the price that you're willing to buy a currency. And the difference in between is known as a spread, also known as the bid-ask spread. This is basically the commission that the broker takes for executing trades for you in the interbank market. Okay, so that's why it's also known as a transaction cost. Now, of course, it does make sense from a business point that the broker offers you services, hence they have to make money some way or another. And of course, they make money by selling the currency to you for more than what they actually pay for it. So because brokers are the middlemen to the interbank market, they also pay fees to what we call their liquidity providers. Liquidity providers are the ones that actually give them price quotation or exchange rates from the interbank market. So they take a little bit more, or they mark it up a little bit better, and of course they give you the price. When you execute the trade, it has certain pips added to it. We want to talk about that. For somebody who's a total beginner, it's like selling iPhones, right? Or you're owning an iPhone store, and in order to make a profit, you'll need to buy an iPhone at the lower price and then sell it at a higher price, or in fact just a little bit more. So if you can sell an iPhone for about $500, then if a customer, or rather you want to make money and a customer comes, you essentially just maybe $499. So just for the sake of an example there, of course you won't sell it for that, but now the difference there is $1, and of course that's the spread if we're talking in essence. So when a broker claims they have zero spreads or no commissions, it's misleading, because they have to actually take or something from you as you're trading, because they are actually trading on the other side for you. Okay, so now we want to talk about another concept many people want to understand, especially as a beginner you're watching this. How is a spread calculated? How is it calculated? So the spread is usually measured in pips, as I said this in a previous episode, which is the smallest unit of the price movement of a currency pair. For example, the most currency pairs, one pip is usually equal to 0.001. An example here that we have is that we have the base currency and we have the code currency or the counter currency. And of course, as you can see on your trading platforms, whenever a price quotation is given, it will have two prices. So two price quotations. So we can see there's the bid price, and then of course there's an ask price each and every time on your platform. Now, if you take those prices, those exchange price, and you minus them, you'll get the difference. And of course, that difference is the spread that your broker charges you when you execute the trade, whether you're buying or selling. So that's why some of you on your platforms, when you execute the trade, you will see a gap from where you saw the market was, and then when you execute, it will leave that small gap, because that's the spread they need to take. Okay, now it makes sense, all right, why your trade will actually start from a loss, then gradually into profit. Okay, now we want to talk about another concept, because yes, we have spread, but now we have types of spreads in Forex trading. Okay, so the types of spread will depend on the platform, on the trading platform that your Forex broker and how they actually make money. So there are two types of spreads. There is a fixed spread and a variable, or also known as floating spread. Okay, so when it comes to a fixed spread, I would also zero in more, but this is how it looks. Whatever the market conditions are, it will be the same between the ask and the bid. So the spread will still stay the same. So if they were charging you 2 pips, it will be 2 pips. Whether there's news, whether it's slow markets, whether it's volatile markets, it will stay the same. And a variable spread or floating spread, it interchanges in between. And I'll list advantages and disadvantages of it. So most of the fixed spreads, right, are usually offered by what we call brokers that operate as what we call market makers or dealing desk. Okay, model, while the variant spreads are offered by brokers operating as non-dealing desk model. Okay, so we want to go into that information right now and understand what are fixed spreads. So fixed spreads stay in the same regardless of what market conditions are given at any time. In other words, whether the market is volatile, whether the market is quiet, the spread is not affected. It stays the same. Okay, so spreads are offered by brokers that operate as market maker brokers or dealing desk brokers. We will zero in more about brokers and what are different types of brokers later on, guys, in the series. Okay, so using a dealing desk broker, the broker basically, now I'll also give you that, the broker buys large positions from their liquidity providers and offers these positions in smaller sizes to their traders. So this means that the broker acts as the counterparty to their clients. So most of you will know that dealing desk brokers, they basically trade against your trade in order to make a profit. Having a dealing desk allows the forex broker to offer fixed spreads because they are able to control the prices that are displayed to their clients. Now, of course, you can smell a little bit of foul play, right? That may actually come in with having so much power to you as a forex broker. And that's what we want to talk about, the advantages of a fixed spread. So fixed spreads have smaller capital requirements. So trading with fixed spreads offers a cheaper relative or alternative for traders who don't have a lot of money to start with. That's why most of the dealing desk brokers, they have a lot of specials, they have a lot of high leverage so that you can deposit small. They'll tell you deposit $5 is enough. A lot of South African brokers are like that. So trading with fixed spreads also makes calculating transaction costs more predictable and more easy. And since spreads never change, you're always sure what you can expect to pay when you open a trade. So what I mean by that, you know what can be the actual spread when you open a trade. Okay? Now the disadvantage, now let's talk about the foul play of this. So rather, I will actually expect, to trade with the other ones where they have different types of spreads rather than a fixed one, which is a non-dealing desk. But yeah, let's talk about it. So you frequently get what we call requotations when you're trading, since spreads are coming from just one source, your broker. There will be times when the forex market is volatile, prices are rapidly changing. And since spreads are fixed, your broker won't be able to widen the spread and adjust for market conditions. You must know something, that when there is news, most of the brokers will widen the spread so that the news shouldn't affect much of the trade or should put you later into the trade. Is a disadvantage as a news trader. That's why when I'm trading news, I'll rather trade with brokers that have what we call fixed spreads. Okay, so now you know what kind of trading. So if you try to enter a trade at a specific price, you will see that your broker will say trade disabled or something like that. You will see that, or it will just block it. Or they will either recode. So they'll say accept price. Some of you have seen this on your demo because you're normally now just trading with the variant brokers, right? Or the non-dealing desk brokers. Many people do trade. But if you're trading with a dealing desk broker, you will see sometimes they'll say recoded, and you'll have to accept or reject from that. okay, then they'll give you a new price quotation. Another thing that's a big problem when you're trading with fixed spreads is slippage is another problem. When prices are moving fast, the broker is unable to constantly maintain the fixed spread, and the price that you will finally end up entering the trade, it will be totally different from what the intended price was. So you will see it being here when you execute the trade. It was here, and when you go check the profits, you come back, the market is somewhere here, or your entry is somewhere late here. But you remember, so it feels like deja vu. So that's actually slippage there. You'll remember, no, it was at this level. Why is it now a little bit up? So that's called slippage. It is allowed because of your trading with what we call fixed spreads or a dealing desk broker. A lot of people don't like that, but you just got to understand what you're getting yourself into when you're trading with a certain broker. Okay, so I hope you're watching and you're listening even up to now, guys. I know it's a lot of information to listen all at once. I'm speaking so fast, but you can just slow down or speed up if I'm speaking slow, guys, because this is valuable information as a trader. Right now, we want to speak about the variable spreads. As the name suggests, variable spreads are changing. Okay, so variable spreads is the difference between the bid and ask price. Currency pairs is constantly changing, and of course they are offered by what we call non-dealing desk brokers. So a non-dealing desk broker gets their pricing from currency pairs from multiple liquidity providers, and they pass on these prices to the trader without any intervention of a dealing desk. So they don't do a lot of admin. They just give you from the interbank market and just throw it onto your trading floor, a trading platform basically. So this means that they have no control over the spreads, and the spreads will widen or tighten based on the supply and demand of currencies and overall the market volatility. Typically, spreads widen during economic data release, as well as periods when the liquidity in the market decreases, like during holidays. So we can see in this diagram, we have normal spreads and have wild spreads. As you can see here on the normal diagram on Euro USD, we can see the spread as we minus them, okay? And we can see that it's actually 2 pips. But the wild spread, you will see that other brokers, especially during NFP, some brokers will just widen it up and it will equal to 20 pips. Imagine when you enter trade and it's already into 20 pips loss. So it sounds too much, right? So it's too much as you actually see that most of the time, but you just gotta accept and know. That's why it's important. A lot of people jump the steps of learning basics. When they get into trading and they executing trades, they become surprised and they feel like they're being robbed. You feel like you're being robbed because you lack the necessary knowledge to know what's actually happening. Okay, so choose wisely, know very well what you're dealing with. Of course, guys, that's the end of our episode, what is spreads in trading. And I hope this has actually really blessed you so much, guys. And of course, I'm not sure how long it is, but I hope you got value information that you will now use even as an intermediate trader or even as an advanced trader. Anyway, please do subscribe, guys, like and switch on that notification button so that you can also get the other episodes that we'll be sharing that are also valuable like this one. Anyway, that's it for now. This is your brother in the kingdom signing out.